Don't
Exactly.
don't trade your heart, trade the chart, and then you'll survive.
I like that. That's a good tattoo, Gary. I feel like I need that like right here on my neck or something. Like, don't trade the chart, don't trade the heart, trade the chart.
Question for both of you that we've got both here on the screen right now. What do you guys think about the Eurozone now that they've just announced this morning? We had this good big pump in the euro when they announced that they're going to start raising rates in July. Do you think this is just a sudden move that's going to continue, or do you think it's a pump and dump type of move that we're seeing right now?
You want to take a whack at it, Ray, or you want me to go first?
Anyone?
Sure, I'll take a whack at it. So, my favorite pair is actually Euro USD. So, I'm tracking it religiously. Yeah. But I honestly don't think it's just a pump and dump. I actually think we could see a little bit more of a movement, especially when we correlate it to other things such as, the DXY and then even the stock market. So like the US 30 indices, et cetera, we can see the correlation between things happening. So personally, I would like to see, a little bit more of a sell-off in Euro USD personally. Yeah.
Well, are you stuck in some trades in the Euro USD?
So I'm not stuck in any now, but I actually traded it earlier today. Take profit on 2 trades. So.
Okay.
Nice.
All right. Now, interesting. Let's give Austin a chance to reply on that as well, and I'm going to give you guys something to think about too.
I think when you talk about major interest rates decisions, you have more experience, of course, with this than me, Gary. But in my years of looking at this, I don't see them as normally pump and dump things. I often see the pump and dump thing happen when they talk about changing rates, but they don't actually change the rates. You see some interesting volatility, but then things kind of continue. But when you actually hear them starting to say we're making progress in raising rates, I think that's more of the policy changing decisions that you see drive the Forex market very often. When you look back on things years into the past, you'll say, oh, why did the Euro AUD sold off from 2018 to 2019? Well, there was an interest rate decision at the start of the year. That's what did it, or whatever it may be. So I think that these are very important decisions. I have a couple of things I want to show you when we start sharing the screen, just about even if you look at bond yields here in the States, there's a lot of interesting, me being not too pessimistic, interesting to call them flags going on right now. And I think that, like you said, this Euro rate hike is one of them.
Yeah, go ahead and show the chart. Let's go ahead and take the time to show the chart because I think it's interesting to share.
Absolutely. So I have your USD JPY pulled up, but I actually want to switch my screen really quick, and I want to show you a different browser. So let me just pull this up. This is a tweet that I saw today. So I think it's just a very interesting chart that's worth us looking at for a quick second. Can you guys see this okay? Beautiful.
Yes, we do.
So this is the 10-year treasury yield. And every single time that you can see a peak here, it's labeled with some major event. Now, I heard this on Real Vision today. I'm a big Real Vision fan. I think that their macroeconomic discussions are incredible. And the guy on Real Vision was saying the same thing that this guy tweeted, which you can see in the top right corner, says rates rise until something breaks. Is anything broken? So as rates continue to go higher, I think it is important to keep in mind that in the past, whether it's the stock market or whether it's the, if you look back into 1980, First Pennsylvania, these bank issues, or maybe a fund goes under, something has to give before we start to see rates return lower. And I think one of those things that could give would be something like what's going on with the yen leading to something else. So it's very important to see there's always something that causes the turn. So we're starting to see things set up, and it's just a matter of what thing are we going to pick to look back upon in the future and say, oh, it caused it. So that's something that I'm kind of keeping my eye on here. But to go back to dollar yen really quick, as we throw this around, it's pretty incredible since the start of March, which you've seen this thing do. So if we just measure the move from the beginning of March, 12% dollar yen, USD JPY, dollar yen, 12% in 2 months on a currency pair. Ray, that's probably one of the first times either of us have ever seen that as long as we've been trading. I don't know about you, Gary. That's huge, right? That's massive.
We've seen plenty. We've seen plenty of that. And you got to know about the JPY. So firstly, number one, on the JPYs, we've had Bank of Japan intervention in JPYs in 91 and in 96 as well. In fact, 98, 91, 98. Now, the thing here is we're at that level. we're at a level where we could very much see a Bank of Japan intervention. And so I'm going to say this. I'm going to say this rally that we see now in the JPYs, which means that this we've seen a sell-off in JPY itself, is actually getting to an end right now. The signal that you want to look for is you're actually going to take a look at the Swiss JPY cross. If you look at the Swiss JPY, you're going to start seeing a switch of money flow from one safe haven to another. When you see the Swiss JPY change trend, that's when you got to start thinking about selling off the JPY crosses, because that's when we're going to start seeing change. And that could very much happen very soon. Yeah, very much soon. So, you know what? I don't normally trade JPYs, and I don't call myself a big fundamentalist, because I know about news. I know how to fix the markets. I know, interest rates are all based on what the inflation is doing, how they can control inflation and keep it to that 2% mark. We know that the US is at 8.5%. The Feds are doing nothing to be able to control that. We know that the central bank with the not the central bank, but the ECB are a little bit late at the party, but they've been keeping rates off at the 0% rate. They're now talking about in July raising the rate. The reason why we had this pump is because the market's actually demanding it. The market wants that. But now, if we're going to see a dump, if we're not going to see it continue, it means that it's already been sort of like discounted that they're going to, raise the rates. So price is already discounted that into the market.
This is the big conversation, right? Is it priced in or not? That is the big question, is what is priced in or not.
Absolutely.
Right?
Yeah.
And you've got to come back to the technicals, right? You guys are both technical traders, right? If you look at the larger time frame, and I was going to ask you a question about Elliott Wave. If you guys studied Elliott Wave or understand that a little bit, you'll actually look at the Euro daily time frame, the Euro US dollar daily, and we've actually had a fifth wave completion. So which means that the market's really looking for a correction move in the Euro US dollar. So we're looking for bullish movement in Euro US dollar. So we can dig more into that when I think maybe Ray's going to pop out a trade there and says he's going to trade the Euro US dollar. And we can definitely dig into a little bit more of that, but it's interesting.
Yeah. I mean, when you look at this, Ray, when you look at Euro USD, are you more bullish or more bearish? Because like to me, Gary, I couldn't be buying Euro USD right now. It's been on such a strong downtrend. And I feel like it's almost ironic because here, and I know we're all in, I don't know exactly where you are, Ray. I'm sure you're in the States, right?
California. Yeah.
Yeah. So in the States, everybody all year and all last year was like, Joe Biden's getting elected. The dollar is going to zero. Everything's going to hell. Right. But in reality, it's been the opposite of that. Euro USD is going down and dollar index is going up. So it's almost funny to me to see that be the progression. You know what I'm saying, Ray?
Yeah.
No, I definitely agree on that. It's actually funny to watch, because I feel like we live in that social media era where everybody's saying like, oh, something huge is about to happen. Prepare yourself. And nothing's happened. It just continued to trickle up with the DXY.
You just read the chart. You made money short. If you just read the chart's going to tell you. And that's why, Gary, I think me and Ray are good competitors for this, because we're like both technical guys. We think about fundamentals, but I think me and Ray both will sit here and be like, yeah, bro, that's a good idea. But you and I don't know enough information to know if that's for sure why that is happening. Like the fundamentals are so tough to be directly factual about, where technicals, price doesn't lie, bro. Once that candle is closed, how is it going to fake me out? It's closed. Yeah. Price is done.
Absolutely. And that's where it comes down. And that was going to be one of my questions for both of you is like, what do you use most to make that final decision? Is it going to be technicals or fundamentals? Because we've had traders on the show that say, hey, you know what? I use both. And in my point of view, it's like, you can't have two chiefs, right? You've got to have one chief that makes the final decision. And we call the fundamentals and technicals as two chiefs. Which one is going to overrule the other one? And at the end of the day, I think you guys are on the right track where you say, hey, listen, I'm a technical trader. I understand fundamentals. I got the gist of it. But at the end of the day, it's got to be my technicals, because that's where I make my trading decisions on. It's got to be that, because that doesn't lie. You're right.
Yeah. I'm a firm believer that, fundamentals are what push the technicals that are already showing and are already going to happen. So for example, when I come to the market, usually at New York Open, what I'm looking for is, where's the supply and demand on my chart? And then where is the actual price at in that moment, before the news is about to come out? Like, study the market and, figure out within that 15 to 30 minute window before the news actually comes out, like, okay, do I feel like, price is overbought at this point, oversold at this point? and looking for certain patterns that can give you that edge to get in the market before the actual move happens.
Yeah, absolutely. Now, question for both of you: do you guys use any sort of indicators to make your decisions, or is it just price action?
Yeah, so I use indicators, and you probably saw them on my screen. I use exponential moving averages and something called a TDI. It's a trader's dynamic index. It's just an RSI with moving averages. And I just use the indicators to identify trend. I'm not entering at a specific crossover because that's too vague, but I'm using them to gauge trend and then set stop levels and read risk reward, stuff like that. But to the question about the technicals and the fundamentals, I think the key, like you said, is having that one chief. And the thing about Forex that got me excited years ago and still is one of the reasons I love it and why I love Bitcoin recently is because you can have a fundamental idea, but you know that it is a price action market. It's a market driven by price action. So like, for example, on Monday, I remember we had a bank holiday in most European banks coming off of Easter this week. On Monday or Sunday, I tweeted a picture of Bitcoin on the daily time frame. And I said, it doesn't look like it's going to be a good week for Bitcoin. If you look at my trading this week, I've had one trade. I bought Bitcoin on Tuesday and I held it till today. So I will think whatever I want to think about a fundamental and even put a picture about it. But at the end of the day, if the technicals are saying buy it, I'm not going to sit on the sideline just because I had a funny hunch on a Sunday that it's going to go down this week. You know what I'm saying? Yeah. I'm still going to read a chart and trust that's the chief.
Yep. Good. We'll stick to that. I think you know what makes a great trader is a trader that can decide on something, which is his trading plan, and stick to his trading plan. So, don't trade your heart, trade the chart, and then you'll survive.
I like that. That's a good tattoo, Gary. I feel like I need that like right here on my neck or something. Like, don't trade the chart, don't trade the heart, trade the chart.
There we go, my friend. There we go. We'll throw a couple more of those out before end of today.
All right, good. Some one-liners.
All right, so all right.